I request you all to please take seat and also clear the passage near the dais. We are starting our session 1. We now move to our CEO panel discussion on the topic Banking for a Viksit Bharat. It's my pleasure to invite on dais the panel of speakers. Mr. M.V. Rao, Chairman IBA and MD and CEO Central Bank of India. Mr. C.S. Shetty, Chairman SBI. Mr. Devadatta Chand, MD and CEO Bank of Baroda. Mr. V. Vedyanathan, MD and CEO IDFC First Bank. Madam Zareen Daruwala, CEO Standard Chartered Bank. Mr. Hitendra Dave, CEO HSBC Bank. And our moderator for this session is Mr. Ruchin Goel, MD and Senior Partner BCG. I request you all to please take seat. I request you all to please take seat as we are starting our first panel discussion.
Check. Thank you.
He's coming in 5 minutes. Should we start? I request Mr. Ruchin to initiate the discussion. Over to you, sir.
Good afternoon, everyone. Can I please request everyone to please take their seats? I know we've had some good sessions in the morning. So if I can just request everyone to, he's coming in 2 minutes. All right, so we will start the first panel discussion of FIBAC 2024. I have a very, esteemed set of panel members. I don't think any one of them need any introduction. Mr. Rao was just, outside escorting the secretary out, so he'll be joining us in a couple of minutes, but we'll start. So let me just start our discussion, the theme being, banking for Viksit Bharat. So Mr. Sethi, let me start from you. So as you look at banking for Viksit Bharat, there are many aspects that I spoke about in the report. Let me touch upon a couple of points, to all the panel members. So the question, Mr. Sethi, to you is, we saw that despite a lot of push on digital, what's happening is the costs in the whole industry are rising faster than income, right? And this is not sustainable going forward. So what are your reactions, thoughts on this topic? What can banks do to really reverse this trend?
Thank you, Ruchin, and thank you to FIBAC for giving this opportunity. I think that was a couple of slides what you have shown were very interesting slides. This particular slide on not getting the productivity gains when compared to the IT spends is something I think most of us are evaluating. The biggest challenge for IT spends is that if you really categorize the IT spends, one is today there's a spend which is required to meet the regulatory requirements. There are something, what we call regulatory demands. So they are non-negotiable. Those costs are non-negotiable. Then the secondary category is what are business accretive, that some new business can be done through implementing a process. The third one is essentially to supplement to our user experience, customer experience. So most of the times what happens, a lot of demand gating does not happen. People do not distinguish between what is essential, what is not essential, what is business accretive, what is not. That is one important area to look at whenever we talk about the productivity. The second feature is, I think when we talked about digital transformation and digital spending, a series of technology upgradations cannot be called digital transformation. I think a lot of investment also had happened in the past on the technology upgradation. So the investment in technology, particularly towards digital transformation, has to be that are we creating an end-to-end experience or end-to-end process which will result in the operational efficiency is something what we need to look at. Something which is not related to technology also is important, that we have rolled out an improved processes, digital interfaces, and which has also resulted in ability to handle large set of volume of transactions. Then what have we done with our existing staff? Were we able to redeploy them? What kind of redeployment had happened? Have they been redeployed in areas where they can go out and mobilize business? That also requires, redeployment also requires reskilling. I think a lot of banks have not focused on this redeployment and reskilling part of it. I think when we look at the productivity gains which have to come from the technology spends, we need to look at data, we need to look at technology, we need to look at manpower redeployment, and more importantly, what is business accretive demands is something what we need to look at.
Thank you, Seti. And I'll keep moving, quickly touching about different topics, just in the interest of time. So, my next question to you, Mr. Vaidyanathan, the governor spoke about the need for inclusive growth, for India to become Viksit Bharat. What has been, your perspective on how can banks and NBFCs really reach out to vast majority of Indians? Many of them today rely on informal sources of credit. Right? So what is really required, for banks and NBFCs to address that last mile?
So Governor spoke about this, and we all recognize it's a big issue. Issue in the sense that if you think of on the investment side, you find that people on the top of the pyramid get good advice. People bottom of the pyramid don't get any advice. So they make more money, these people don't make money. So rich, poor increases. On the lending side again, people bottom proper pyramid get low interest rate for everything and get credit. People get a high interest rate and get no credit. So this issue of people at lower income segments or lower middle class or unorganized segment not getting either credit or investment advice or good service is a problem, actually, and it is exacerbating the issues in the country in a way, but, in that sense. So this has no amount of policy intervention, calling this priority sector, this, that, etc., has actually helped this issue. Only in the last 8 or 10 years, this is massively getting fixed, not by a remote distance fixed actually, but it is in the direction of getting fixed. Even now, if you see, not just this rural and small business not getting credit, migrants not getting credit, let me say, the gig economy people not getting credit, people of marginalized tribal section not getting credit. It's a common issue. So the biggest hope is actually this evolution of this technology, because technology can make things happen which human beings can't.
Thank you, Mr. Vaidyanathan. So just moving on, to another topic that I highlighted in our report was on, deposit mobilization. Mr. Chand, if I were, to pick your brains, there is a structural change happening in terms of the way households are saving their money. What can banks do to really counter this trend? And any other, help that banks require to be able to address this issue?
Yeah, it's a very pertinent at this point of time. What we see for last 3-4 quarters that mobilizing deposit is a challenge for the banking system. And I think there are two issues here. One, to some aspect, I feel that this is more of a transient in terms of the low growth of deposit happening, typically because of the liquidity scenario prevailing in the market. At the same time, there is bit of preference changing of the savers. They are hunting for higher return. And we have a developed capital market, so their tendency to go to the market is much higher. So when I look at the scenario, both the scenario, as I said, that I feel more of a transient, not a structural issue at this point of time. But at the same time, we as a bank typically need to figure out to address the change of preference happening for the savers. So bank like us, if you look at on the deposit side, deposit is not going to be a generic product, it has to be a bundle product now. So if I expect that a customer would open a PO saving account at this point of time, possibly I need to bundle out to offer many other products along with the savings so as to mobilize more deposit. At the same time, the preference of all these depositories is also not to have more of a branch banking, rather more of a online digital banking. And if you look into these two scenarios, I think the deposit mobilization, which is a constraint at this point of time, would improve. We are seeing traction. I'll just give you a small example. It has been that we need to innovate on the deposit side. Like a bank like us, SIP has been a big, what you can say, a flagship scheme for mutual fund. We had a recurring deposit scheme earlier, but never marketed in a way. So within the recurring deposit, we renamed the product as a systematic deposit plan, SDP. So a SIP gives you an uncertain higher return, but at the same time, SDP gives you a certain modest return. So we need to innovate a lot. Things are happening, but at the same time, my strong view that the current deposit advance growth is more of a transient, not a structural one. With the liquidity improving the system, possibly things would come back and the banks would have a higher deposit growth.
Thank you, Mr. Chan. So just picking up on, the point that you made on innovation, and you talked about SIP. So Mr. Rao, a question to you. The mutual fund Sahiya campaign has been, quite successful. AMFI has been in the forefront of doing it. Do you think IBA, being an IBA chair, the banks need to come together to really market deposits a lot more to customers?
Yeah, as far as these mutual funds are concerned and bank deposits, both are on two different ball games. And let us understand why customers are moving to the mutual funds, number one. Number two, how and in what way the mutual funds are offering more returns than the bank deposits to the customers. If we analyze, with the generation shift, cultural change also happens. The earlier culture of security is slowly moving to the culture of securitization. The people who are now keeping the deposits, if you analyze their demographic profile, higher age groups are keeping the deposits with the bank, and all youngsters are moving to the market as investors rather than savers in the banking area. If you analyze further, the returns which are given by the MF, that is mutual funds, is higher because bank deposits cannot give, because our deployment of our resources is regulated so tightly by the regulator, you cannot get higher returns from the deployment. As far as the bank deployments are concerned at every level, we know that end use has to be ascertained. And you have restricted rate of interest for many of the asset products what banks are offering. Vis-a-vis, if you see the mutual funds, I do not know end use verifications, and their deployment, whether it in the priority sector or to the MSME or to the government schemes, there is no restrictions. So that's why mutual funds are able to offer more than the bank deposits. But going forward, we cannot dictate the customers, but the way we have to evolve ourselves and ensure that higher returns be given to the depositors, there the involvement and also active participation of the government and regulators are required so that these bank deposits, which are really helping the economy to grow, rather than putting the money into the market where at times there may be a lot of risks that are involved. And another thing which you analyze, the investors, so-called investors in the mutual funds, if you say they are investor, I don't think 99% are analyzing the technical or fundamentals. Just they are following, I do not want to call it as a herd, but as a group. So going forward after 6 or 7 years when cycle turns, definitely this will have a lot of systemic risks that may come out. And for example, if a mutual fund invests in a company, even in a AAA, I don't think they have to make any provisions. But for a bank, even for a AAA company, we have to make a provision of 20%. So there are a lot of differences in the deployment. That's why returns are less. That's why we are unable to pass it on to the depositor. But this is the reality. But definitely banking as an industry will come out with some innovations. And at the end of the day, we will see that how we are going to ramp up our deposits.
Thank you. Thank you, Mr. Rao. Zarini, if I way to ask you a question on resource mobilization more broadly, not just deposits, and just being a foreign banker, what are the other avenues, banks can look at to augment their resources, given that credit growth has been faster than deposit growth in the whole industry?
Yeah. So clearly, one can supplement the rupee resources with dollar resources, and external commercial borrowing, FPI flows, dollar bond, etc. could be other avenues of resource mobilization. Having said that, I think the withholding tax incident, which has been revised from 4% to 9% for dollar bond, that has really affected the dollar bond flows. So unless you come via Gift City, but the issue is that the investors are not based in Gift City. It's a very widely distributed investments when it comes to a dollar bond. So that is one area, if it can be relooked at, the withholding tax, because the interest rate so far is high, and then there's withholding tax. So the total fully hedged cost is quite high for the borrower. The second area is on FPI. So even FPI, if you were to do it from Mauritius, it might be cheaper than doing through Gift City. So that also, there is a withholding tax differential, which also hurts money coming from FPI sources. The other area where it can be relooked at is today, if you give a ECB for a refinancing of a rupee capex loan, actually the minimum maturity has to be 7 years, average maturity. And if you do it for non-capex rupee loan financing, refinancing, it is actually 10-year minimum maturity. That you don't get hedging lines. So if it was the refinancing could be made for a shorter period, it actually becomes another way of using foreign currency liquidity to supplement the rupee resources. So, the other thing is, for example, InvITs and REITs, they are not able to borrow in dollars. Even that can be permitted. So there are multiple things that can be done. And of course, the debt mutual fund, I think, post the benefit of indexation being taken away, we've seen about 1,80,000 crores or so has gone off from debt mutual funds. So that is another area which was at least lending to AAA, AA. So that supplemental rupee resources have also sort of diminished. So multiple things can be done to supplement the rupee resources for the banking system.
Thank you, Zari. So just moving on, Mr. Dave, to another, important area. Banking, is becoming more complex globally and in India, right? And we see interconnectedness between banks and vendors. So any thoughts on what can banks do to really improve the overall resiliency in the whole system. Your thoughts from your global perspective.
Yeah, but just before that, if I can just weigh in also on this.
Sure.
I think it's an oversimplified argument that because, let's say, people are putting money into mutual funds, that's why there's less money for banks to tap. Because even the mutual fund buys something that is sold by somebody, so that liquidity comes back into the system. So I think it would be good for IBSR to actually do a study, right, as to what typically causes deposit creation. And I think because if we keep blaming SIPs or mutual funds, we might be solving the wrong problem, is my sense. I think the other thing on liquidity to remember is that in 20 and 21, the banking system had enormous pools of liquidity, right? So you naturally went a little slow on the liability side and, tried to deploy the enormous surplus that was injected through RBI and Government of India, etc. I think banking books, having worked in, trading books also, banking books are a little slow to react. And now that the reaction has happened, I think you will see it very differently. The third thing is government balances, right? Last 18 months, government has been sitting on huge liquidity. As now it spends more, you will find the fight for liquidity. But I think it will be interesting to study what is the biggest impediment to deposit creation. Because if Bank of Baroda launches a fantastic deposit scheme, the customer will move money from my bank to his bank. The system liquidity, the system cannot change like that. But on your broader point on long-term resiliency, etc., I think clearly, as we become more and more digital, as less and less customers come into our branches, as the personal connect gets a little lost, as the volumes that we are processing, right? Your earlier question on tech spends being at such a high rate is because between 2013, which was the start of your chart, and now the banking system must be doing, I don't know, 20x, 30x, 40x of what it was doing, right? So I think clearly resiliency in your systems, resilience in your technology platforms would be one. The link thing, I think cyber was brought out there. I think, all of us are exposed to it. I was told my bank globally gets about 100,000 cyber attacks every day. Okay, so just imagine how much money we are pumping into that part. So I think technology resiliency, I think the other thing would be people. My guess is banking as an source of attractive employment is changing. The narrative is changing, and how do we make sure that they feel good about the role that we as an industry play? And third would be regulatory compliance, I think, as the governor alluded to it in his own remarks. So these three I would suggest.
Thank you, Shadabe. Maybe I'll do another round of quick questions, and I'll leave some time for audience also to ask questions. Mr. Sethi, coming back to you, SBI kind of has been in forefront of investing in digital. Can you share some, experiences of what's actually gone well, and what could be done even more as an industry to fully embrace digital and get the full benefits of the DPI that India has?
I think SBI, as we keep saying, is a proxy to the economy. Today, we have 50 crore plus unique customers. And the important thing to realize that the journey of SBI in the digital ecosystem is the journey of India's journey of digital ecosystem. I think it cannot be separated. And the way we have adjusted, readjusted, and created the resilience, what Dave was talking about, in terms of the handling volumes which are unimaginable. I'll just give a few data points. Of course, many people know that it's a very large bank. And for instance, we handle 1/3 of the UPI transaction, which means about 18 to 20 crore financial, non-financial transactions a day. This is only on the UPI. If you take on our flagship mobile application, we handle 1.8 crore peak login every day, which means that you not only have to take care of resilience of your backend systems, provide the customer experience, and also see that your cybersecurity stance is strong, and you continue to make the channels available. As you know, we have the largest channel both in the physical and digital, ATMs, business correspondents. Overall, the physical touch points alone in SBI is about 1.6 lakhs. So the combination of this magnitude of the transactions, I think the biggest learning for us is that how do you create the resilience in the system? So this is, I personally believe, is one of the major achievements of SBI. And during this process, we faced a lot of challenges. I think biggest challenge every one of us is facing, particularly the banks which have had a legacy system, is that when you want to create a improved customer experience, of course you need to reimagine the customer journeys and also engage with a few fintech players, software solution providers. I think most of them struggle to work with major banks because the legacy systems have to be integrated with the agile systems which they developed. So this is one learning probably the system has picked up from SBI, that many of the fintechs which have worked with SBI could carry the learnings to other banks and were able to implement successfully. The second, in terms of the successes, our retail internet banking is one of the major successes which we have had. Many people may not know our retail internet banking predates our core banking. It's almost more than 30-year-old. The platform is still one of the largest in terms of the registered users. We have about 13 crore registered users on the internet banking alone. And the one which in the last 5 years, which has become synonymous with the SBI is the YONO platform, the mobile application. We are proud to say that I think after YONO launch, there are so many other banks, particularly in the public and private space, who have come out with mobile banking, and mobile banking has become mainstay of the whole banking experience for the customers. Even on the YONO, we have about 8 crore customers now, and it's growing. But the challenges are, as I said, about how do we work on the legacy systems, how do we hollow the core and move towards more and more microservices so that the agility of the systems and agility of the partners can be made use of. I think that is one challenge. The other challenge is essentially that, when you're moving most of your customers to digital, how do we create the digital literacy and also protect our systems from the cybersecurity incidents? The investment in cybersecurity is significantly going up, but we also feel that the professional support for many of the cybersecurity activities is a limited one. I think that's going to be a big challenge for going forward.
Thank you, Mr. Sethi, for sharing these very valuable experiences. Mr. Vaidyanathan, your bank is known to be one of the banks which is adopting very new age, cutting edge technologies. Now many other banks are trying to adopt these, and sometimes technologies like GenAI may seem to be just a fad coming in and going out. And every 2 or 3 years we have a new technology coming in. What has been your experience of adopting such new age technologies? Do they really benefit either the customer or your internal processes? What advice do you have for the whole industry?
Well, the most important thing is to have a technology stack, because if you see Instagram or Facebook, etc., you can flick the screen, it works so well. But behind the scene, there must be stack, something running there, which is the real powerhouse. So, for example, if you think of all the core application systems, typically they're given by the same vendors in the country, whether Finacle or whatever. But then to have a fantastic middleware, to have a really good engineering layer, to connect with the channels where the customer will engage, then that could be the core stack. On top of it, to have a data lake, data engineering teams, machine learning capabilities to pipe from the lake into this, and from there to have capability to reach and build fantastic journeys. Now, these concepts are super important. I call this a stack. You can't see it. It is there behind the screen. If it's contemporary, if it is modern, if it is cutting edge, then the experience layer comes out to be very good. So the short point is that stack is very important to build really beautifully. We put an effort in building that. I think we got a really good stack now. Second thing is, I'd say that eventually when the stack is good, because everything in the customer experience, it's consuming from some data somewhere, and that has to be clean, that has to be hydrated, that has to be, now that one. Second thing is that if this is there, then the experience layer, we need to build good quality designers, UI UX engineers who can really build good quality screens, etc., app, etc. Once this is good, then you can pipe the same stack into the branch. Your branch experience will be very good. The same stack you can pipe into mobile app, it will be very good. If you give it to a relationship manager, the screen will be very good. So the building, in other words, building the stack is very important. Then every experience layer, whether anywhere touches it, will become very, very useful. Similarly, the same stack, if it's good, assisted journeys will become very good. So I believe a lot in building a really good tech stack.
Great point, Mr. Vaidyanathan. Moving on to another topic, Mr. Chand, a question to you. Many speakers spoke about the importance of MSME lending in the journey towards Viksit Bharat. There's been a lot of push by the government on MSME lending, but what we find is that not all lending is viable in terms of portfolio quality. Right? What has been your experience and advice, or what can banks do to not just give loans to MSME, but do it in a manner that the portfolio quality is good and ultimately sustainable and profitable for the whole industry?
It's very pertinent in the sense that MSME has been a backbone as far as the economy, and so is the banks lending to MSME in many decades now. So in between there was a challenge with regard to an elevated level of NPA, but now things have stabilized fully. But the aspect which is very important, as we see in the personal loan on the retail side, in MSME also, that is also the government push that the lending has to move from the asset-based to cash flow-based. And more we understand the cash flow of all this MSME, then typically the product offering would be much more better. At the same time, the default rate would be much lower. So many of the banks like us, again, we are looking into the cash flow model, and that is what actually the talk of the budget this time also. And we see that even asset would be a comfort, but the cash flow really gives you the money back. So I think the time has come to, like we have seen in the personal loan segment, similarly MSME also would be more cash flow based. Bank like us offering dedicated cash flow, cash management system to MSME borrower. And I think on a current level of balance level of the stress book in the MSME, with the growth opportunity, with the cash flow lending, things will be much better going forward.
Add a bit of perspective to this in the light of this, the stack comment and the MSME comment. See, what is happening is that if you have a really good stack, now the ability of the stack to connect to, let me say, UIDI, to NSDL PAN for validation, for the bureau, for fraud scorecards, for the many other ecosystems that come in the country, e-KYC, e-mandate, e-agreement, e-collection, the whole capability of the stack to connect will be very good, number one. Number two, the scorecard that we will build in the context of his MSME comment doesn't have to be MSME scorecard, so blunt. What is MSME scorecard? MSME is just a term, millions of. So you can make really high quality, for example, in our case, we don't have something called MSME scorecard. We have a scorecard for salons, one scorecard for chemist, one scorecard for, something, because then you can get very, very precise. There are 22 such industries for which we made some scorecards. So then you can have a much more, you have a good stack, your ability to connect, and you have a fantastic scorecard. The whole stack, then we talk of doing inclusive financing. It doesn't happen by just talking about it. So the ability to reach those segments, evaluate them independently, with the capability of technology, gives us the ability to get a good yield also, low credit cost also. Whole combination works. It's profitable, you can reach, and to his point, then you can make MSME make it more real.
Thank you, Mr. Jonathan. So, Zareen, just moving on to another topic, there was a discussion also, many speakers spoke about on green finance and ESG more broadly. India still as a country is in kind of nascent stages of ESG development. What has been your learnings, on this topic globally, and what can you advise banks in India on ESG?
Yeah, so globally, I think ESG has really taken off. If we see last 2 years, there's been $2 trillion of raise, financial bonds and loans, etc. So, and year to date, it would be like last few years, cumulatively, it would be about $8.5 trillion. So massive sums of money are going. And in that, about 61% would be green, and the rest would be like social and transition finance, etc. If we look at India, India actually, dollar bond and other loans that we've seen, about $15 billion was done last year, and this year, year to date, it's 16 billion, but it's still 1% of what's done globally. Having said that, I think we're seeing quite a bit of the regulator itself, SEBI and RBI, taking a lot of steps, and we are seeing, for example, SEBI telling the top 1,000 companies to disclose, and we're seeing good amount of traction, especially in transition finance. If we look at what other regulators have done to enable, if we look at Bank of Japan, for example, for one whole year, they give the interest-free, the subsidy for the interest portion of the first year. If we look at Mass HKMA, for example, they subsidize the entire second party report, etc. So each regulator is doing something to sort of enable. If we look at PRA, the UK regulator, they, for certain public good, they actually give 25% risk-weighted asset as concessions. So instead of 100%, it will be 75%. So there are various things that we are seeing at play to encourage green finance. Our own bank, we have said that next year we will be in our own operations net zero. And by 2050, even our clients that we lend should be net zero. That's the roadmap. And we have said that we will enable our clients to raise about $300 billion in a decade. And those are things that are well documented. As a bank, we've stopped funding coal-based power plants. Coal particularly has been something that the bank has publicly stated. So there are various things at play. And I think eventually we'll see, you know, in India also some of those global best practices sort of coming.
Thank you. I'm mindful of time and would like to keep some time for open Q&A. Anyone, sir, if you can just take your name and ask the question. If you can have some mics there, please.
Thank you. You know, when we are talking about Viksit Bharat, and in Viksit Bharat, my name is Chandrakant Salunkia, I'm a president of SME Chamber of India. When we are talking about Viksit Bharat, in this marching towards Viksit Bharat, banks are going to play a very important role. Even the Prime Minister, Finance Minister, RBI Governor, even Secretary talk about MSME empowerment. But what is the role or action plan by the banking sector, since the three heads of the Indian bank, one leading private bank, two foreign banks heads are here, and you know, looking at the, you know, this segment, MSME segment, which is providing large employment. Now 100 industrial parks are coming. In that, more than 90% industrial will be set up by the MSME sector. So what is the action plan for the Viksit Bharat towards MSME sector? Because, you know, front line maybe in next 3 years may be changing, but back line there are a lot of bankers. How they will get a message from you to put more effort. Second question, you know, why not differential rate of interest scheme can be implemented to provide up to 5 crore loan, especially for the micro, because around 6 crore micro and tiny businesses are there. They are more than, you know, lower level than weaker section. Why not we look at, you know, social angle on the, you know, micro or tiny industries to provide a next level support where they can become small, and small will become medium, and medium become mid-corporate. Then we can march towards Viksit Bharat. Thank you.
Anyone would like to take the question in MSME?
See, as far as this Viksit Bharat concept to make the country Atmanirbhar in real sense rather than Bank Nirbhar, what we have to think, it is a humongous task. It cannot be delegated simply to the banks. all the stakeholders have to involve themselves. The reach of public sector banks or the private sector banks, and also through the BCs and by other channels, whatever banks are employing, it should be complemented by the NBFCs, which has good reach. At the same time, relevant aspect, what you have pointed out is the differential rate of interest. Yes, that is the good point to be taken. And going forward, definitely this will be the philosophy that will be guiding all the stakeholders who are reaching out to the last mile borrower.
I'll just add to that, so just to add some clarity to that. If you see the historically, Mike, if you see historically for hundreds of years, or maybe more than 100 years, the financing for small entrepreneur has been basically working capital financing. So they say, give me property, I'll give you a bank current account, and then whenever you have sales, come bring it here. Every bank has it's called business banking, all banks have. But that is really a very, it's not at all inclusive in any way, because small entrepreneurs, all of them cannot give property. If you have property, then what about 90% of them who don't have property to give? So let me say in the last 8 or 10 years, this changed because of the fact that you can access the PDF form of the bank statement of the customer, and the computer can read the bank statement in seconds, analyze it, find out what is the balance of the customer in the first 10 days of the month, and you can quickly take a decision on that. That is a very big breakthrough. Second very big breakthrough for financing is this account aggregator. Because now, again, it's a digital public good that has come, a public infrastructure that has come. Now, you can actually see the balance of the customer in the multiple accounts, because customer is giving you access. That one, plus ability to see bank statement, plus the ability to do high quality decisioning because of the advanced scorecards available. I'm frankly, first of all, I really feel they have a bad deal in the country, because they really, bottom of the pyramid people, they never got credit for multiple reasons we all know. I won't go there. But I'm frankly more hopeful now than before. If you see almost every lender now, the biggest growing component now is MSME. People think it's retail. Actually, it's MSME. And I think there's a reason, because that market is now beginning to be, the visibility of the customer information is much more today.
Mr. Shetty, you can highlight on the differential rate of interest scheme. Can we convert into up to 5 crore?
Actually, I didn't understand the question very well. You could repeat that. What is the differential interest rate scheme?
Differential rate of scheme is especially for the weaker section.
Okay.
And if you look at the micro and tiny, because India is based on the micro tiny industry.
Yeah, definitely.
Maybe they can talk about it. As far as I'm concerned, this is really again a bit of a tragedy that the person who has the biggest burden, the most stressed, not only here, all over the world, always pays the highest rate. Okay, it's the truth of life. And truth, but it's an unfortunate truth. So the thing is that, but still, end of the day, market economics about where the opportunity takes you is very important. I'll tell you, just because I have personal experience on this for a long time now, let me share the numbers. When I left ICICI Bank in 2010, the first business I started was financing kirana shops, okay, and all that category. Borrowing at 13%, 12%, lending at 24%. No scheme, nothing was there. That business what that business was at that time, 100 crores in 2010. Today, that plus retail put together is 1,60,000 crores in 14 years. No incentive, no promotion, no priority sector, no benefits. Just the opportunity. So I really feel that when the ecosystems opens up, when the opportunity is there, when the drive is there, these things come. That's my thought. You can add to it.
I think in another context I mentioned the credit is an important area for MSMEs. Timely credit is more important. I think this is what we have been focusing for quite some time, that how do we make the credit available to those people who need it in time. And the visibility of cash flows and data and bureau data, GST data, I think a lot of things are helping us to devise rule engines which would help us to make the decisioning much simpler, easier. And today we have done, I think incidentally you are taking 5 crore limit, I don't know why, but in SBI, up to 5 crore rupees, we have completely made a rule engine based decisioning for credit. There's nobody who actually prepares a proposal and takes a call. It is all purely data based. And we also have built the incentive, because now I know that I'm relying on credible data to take a decision, and the credit decision is based on certain facts and figures. My confidence level is much higher than what used to be earlier. So we are giving that incentive to people who actually qualify to get credit under the business rule engine. To answer your question, the differential rate of interest for those people whom I have the data and I'm able to assess their credit requirement is being given. The biggest challenge for us is that where the data is not available, and obviously much of this lending which happens on the unstructured database is done through the MFIs and NBFCs. And while we are making reasonable credit available to the MFIs and NBFCs, for example, SBI is the largest lender to this ecosystem of NBFCs and MFIs. In a way, you must also give credit to many of the banks, large banks, that on lending to MSMEs through this is also a biggest contribution banks are doing. It is not only our own loan book which you have to look at MSME funding, that the whole ecosystem which is being funded by the large banks, which eventually is reaching the MSMEs. That is also important. But how do we reduce the cost eventually to the MSMEs if it is going through this intermediation process is something what we need to really work on. They have high collection costs. We keep working on them. I think co-lending is one arrangement where the blended costs can be reduced to the MSMEs. There are various ways of doing it. I think, as Vaidya has mentioned, MSME is one single sector which is growing the fastest. Even I think double digit, 18 to 20% growth rate is witnessed in MSME. And next analysts probably would start asking what is happening in the MSME space. Is it overeating? The moment the focus now gets shifted from retail to MSME. But I personally believe that the unmet needs of MSMEs are being met now because we have greater ability to assess their requirement in a much more confident way. I think that the lenders are more confident to lend, which is extremely positive sign for MSME sector.
Hello.
Second.
So myself, CA Dheeraj Khandelwal. I'm heading the committee called MSME of the CA Institute. And sir, from last 2 years, we are heading a MSME Yatra in entire ICI branch,
A lot of people want to
100 branches.
MSME enough discussion happened. A lot of people asking, just bear with me. MSME ho gaya, yaar, ho gaya.
I'm just giving the facts. Nothing is fine.
Good afternoon.
Don't get me wrong. Let's just discuss MSME.
My name is Vineet Nahata. I represent Powgill Treasuries. I would like to draw your attention towards the green financing. In India, green financing has not taken off as it should have been. The greenium which should be available, it's not present. The sovereign green bonds as well as the bonds, green issuances of corporate bonds. The liquidity is not there, and the exposure of banking industry towards these green issuances is not encouraging. One reason which we find is that there is no tax incentive to the investor in investing in green bonds, the yields which they are compromising on. There is no tax incentive which suffices for that. So I would like to receive your comments and your remarks on this.
Mr. Shetty is best to talk about this.
I think
we are fielding our best batsmen. For all the difficult questions.
You have asked the question and you also have given the answers. There's nothing much to add. The so-called greenium is a concept which is not picked up. For example, we have launched a green deposit. Why would anybody put in green deposit? Do you put in green deposit? I say that 50 basis point less you have to take from me because I'm actually funding the green activities. So the disconnect between the savers who do not see any value in putting in green deposits and are willing to take the lesser interest rate is not going to really help us. How do I push a green deposit unless I give less rate of interest and also I'm charging less on the green financing activities? So I think this is something which we need to, it evolves. One thing what is happening is that the ESG part of the corporate lending, I think we may have to adopt some of the European models that you don't give the concession right in the beginning when you give the loan. I think it could appear to MSMEs, corporates, or anyone that the greenium on the loans can be front-ended, while the liability side is still a challenge. When we access the international market and we say that, I'm going to come with a green bond, we did one green bond issuance, I keep asking the investors, you tell me what is the differential delta you are giving me over my regular bond issuance. Nobody is promising me. At the most, they may say that 2 to 3 basis points. The cost of compliance of issuing a green bond is much higher than what I'm going to save on that. So the commitment to raise the green liabilities and commitment to green financing, despite not having any green liabilities, today I think Indian banks are extremely positive in financing the green activities. We have created such a large renewable energy portfolio in the country. I think probably the kind of additions which are happening into the green energy is unprecedented. And we are all helping in achieving, as part of the Viksit Bharat, our goals of net zero, much faster than what is anticipated. So I think without getting really confused on the green bonds and green deposits, let us focus on what is that we can do on the financing side. Ultimately, some of the foreign capital has to come. It is coming. I think I'm told a lot of equity money is chasing the battery storage, pumped storage capacity, and green hydrogen. Obviously, need not be that this has to come from the bank financing. Whichever financing it is coming in and helping us to green the economy, I think we should welcome it.
I must
You
share
want to
one
add something,
important point, Mr. Shetty, actually, that we are financiers of electric vehicles, which is green, basically. We are finding, I'll tell you one good news, which is everybody will agree, that the asset quality of electric two-wheeler financing is actually better than the combustion engine. Delinquency is lesser. Better quality customers are taking it in a profile sense, and that's actually good news for you to the extent that you.
Yeah, so just wanted to supplement. In Singapore and other markets, we're actually seeing sustainable deposits as retail customers putting sustainable deposits, and they are coming maybe 10 basis points cheaper. It's not substantially cheaper, but that has started what we see overseas. And like I mentioned, if some concessions are made on, for banks on risk-weighted assets, those kinds of things, that can again translate into the lending rates. So I'm sure those things will evolve in India also. It's a matter of time.
Maybe just in the interest of time. Okay, somebody's gotten up. So very last question because we're running.
I'm K.K. Gupta from Resurgent India, sir. The recent union budget has announced some concession to the SME sectors, either to have a coverage of 100 crore rupees, back guarantee. Another important aspect is assessment by the bank themselves, instead of depending upon the digital platform. So just I want to know what the bankers are doing for that, for new assessment models.
Was the question clear?
You were talking about the 100 crore guarantee scheme for the MSMEs, which is announced in the union budget.
Yes.
The detailed guidelines are yet to receive. I think once we receive, we'll work on them.
Another point is new assessment models on the platform of digital platform. You have to introduce, without asking any information from the SME sector, the banks should assess their own. This is the union budget announcement.
This is essentially the cash flow based funding, which has been asked.
This is not cash flow. This is for the digital financing, digital platform. You have to collect the information from the digital platform and assess the requirement of the SME sector instead of asking from the party.
I think we have discussed SME enough. You have a last question, please.
Thanks, Ruchin. Adil Shetty. So the senior bankers in the room have been at the forefront of India's fight back against payments fraud and phishing. August 28th, TRI had a meeting with all the financial regulators in terms of curbing this problem. So my question is, how can all stakeholders align to reduce this payments fraud phishing problem, but without destabilizing compliant processes that everyone depends on?
I think this is a very big problem for everybody, as customers, as the industry, as regulators. I don't know of any other country where the regulator hires one of the most high-profile actors of all time, like Amitabh Bachchan, to come on TV and say, please don't click here, please don't click there. I think the number of messages all of us must be sending to all our customers. I'm an SBI customer as well, so SBI never asks you for this, SBI never asks you for that kind of a thing. So, but eventually, I think technology will, your industry will also have to help the banking industry, because you almost need to know that a call which is coming in is from a bad device or a bad number. And we will have to improve on that, and we'll have to make the cost of fraud on the perpetrators very, very expensive. So every time they have to buy a new phone, not just a new SIM, right? Or to buy a new laptop or things of that nature. But I think we mentioned digitization in the earlier part of the discussion. One of the unfortunate byproducts of extensive digitization is the fact that there is 1% of the population out there which operates as syndicates. So it's not some one person. It's we've all seen Jamtara, but there are hundreds of Jamtaras out there now. So it is a very good question, and I think the industry, my sense is next 10 years will spend significant amount of money on ensuring that their customers are protected. The risk also is that the regulator or the legal authorities say, listen, up to a certain amount, under certain circumstances, you make good the customer, even if the compromise is at the customer end, which is a law in some parts of the world. So I think it is an imperative, and I'm sure IBA and other big banks will help us find the best way forward.
Just to supplement, actually at the back end, a lot of work happening between multiple stakeholders to see that these are minimized, or any action by the banks on the matter or the stakeholder is in a non-disruptive way. So every day, along with the business, we are talking about how to again control all this. The biggest thing what he said is the awareness level at the user level. That's something which everybody is now trying to drive and bring those awareness. But be certain that the action would be done in a manner which is non-disruptive, so there won't be any disruption there.
Thank you, everyone. I will bring this, first panel discussion to a close. We had the privilege of, very, very, senior members sitting on the dais here. We touched upon a large number of topics, but I think it really sets up the discussion for the next 2 days on various aspects that banks will have to support the whole economy, be it MSME, retail credit, digital technology, ESG, frauds. Right? I think there'll be specific, panel discussions on each of these topics separately, but I really thank all the panel members. And thank you, everyone, for such an engaged discussion. Thank you.
Thank you, all dignitaries.